Good morning. It's Thursday, August the 11th. It's Steve and Jamie with Talking Bull from Signal Centre Acuity. Welcome this morning. How you doing, Jamie?
Yeah, all good, thanks, Steve. Looks like it's going to be another hot day today, so preparing to battle some of the heat, but no, all good, ready to dive into some stocks today.
Yeah, lovely, excellent. And we've got some market moves as well yesterday. A lot of it are based around the US CPI. Let's dive into that. Let's start with the headlines and then drill down in to the technicals. US inflation declines more than expected. Consumer prices were unchanged on the month compared with expectations of a 0.2% increase. The year-on-year rate declined to 8.5% from the 40-year high of 9.1 and below consensus forecast of 8.7%. Energy prices declined 4.6% on the month, although there was still a 32.9% annual increase, while gasoline prices dipped to 7.7% on the month to give a 44% annual increase. They're talking about big increases coming next year as well. So all feels a little bit better, but it's not really, is it? Anyway, following the lower than expected inflation data, there was a shift in expectations surrounding Federal Reserve policy, with markets now expecting that there will be a further 50 basis point rather hike in September, rather than the 75 basis point expected ahead of the data. So nice little turnaround there. There was also a strong boost to risk appetite following the US data, with a surge in equities led by strong gains for Wall Street. Global equities were all able to make net headway, while risk-sensitive currencies posted strong gains. Chicago Fed President Evans welcomed the latest data, but added that he still expected interest rates to increase this year and in 2023, with an expected peak in interest rates of around about 3.75% to 4%. Minneapolis head Kashkari stated that the data had not changed his outlook, and it was not realistic to expect a cut in interest rates early next year. Obviously, San Francisco Fed President Daly stated that inflation was still far too high, but also commented that her baseline scenario for a 50 basis point hike in September. The dollar dipped sharply following the CPI inflation data, and the currency index overall sliding to 5-week lows. There was a limited US currency recovery following the Fed rhetoric, with markets reluctant to chase the dollar lower. Choppy trading is expected to continue. Trading volumes expected to remain low in the short term due to the peak US and European holiday season. The lack of liquidity will maintain the risk of volatile trading across the asset classes. So on that note, we'll jump into one of the riskier asset classes that we normally start with, Bitcoin. See how that fared. That fared pretty well yesterday. We formed the daily candle was a bullish outside candle, which has reacted again from this 21-day moving average. Prices continued this nice corrective channel formation and looking to move higher. We've actually hit the highest levels that we've seen since the 13th of June. We've got up to where the 30th of July high was, and looking pretty strong. So expecting a bit further on the upside, a bit of follow through maybe today as this corrective rally continues. And again, we've talked about this in a bit more detail start of the week. The Bitcoin or the cryptocurrency, some decent levels of resistance above 25,400 before the real test for me between 28,000 and 32,000. That would be the major resistance in my eyes. Overall volumes as we rally, volumes still moving lower, still grinding lower. So more of bearish divergence there rather than a sustainable rally in my eyes. Well, let's take a look at commodities. Taking a look with gold first. Gold managed to reach a high of 1808, so broke through the $1,800 psychological resistance. Got up to 1808. Nice little rally, but forming an evening star formation, and that really sort of like, we can tell that this resistance line, this bearish trend line that we've drawn, or trend channel that we've drawn, has formed quite nicely. That's created a third point on this downward trending resistance line. So could be a bit of a turnaround on gold from here. Obviously, that's one of the assets which would be impacted when we get the stock markets rallying. Gold tends to take a little bit of a backseat. Prices to watch on there. Let's drill down a little bit closer to the intraday time frame. We can see that the inverse head and shoulders formation finally or achieved its measured move target, we can say, and then has stalled from there. So pulling back a bit, but still in an upward trending 4-hour trend. So still a little bit of positivity and a little bit of support below. We expect support to come in around about the 1775 area. Below that, probably around about 1765. The major support coming in at 1755. So all the fives to watch there. On silver, much of the same. We managed to get up to 2084. They were prices that we hadn't seen since the 29th of June, before we turned around on the 4-hour channel, 4-hour, forming a bearish candle and pulling back. Support on silver 2035. Below that, the major support coming in at 1955. Taking a quick look, copper, quite seeing the same sort of formation, this corrective channel, looking quite nice rounded bottom formation on the 4-hour chart. Let's look at the daily chart, nicely above this 21-day moving average. Nice corrective formation, and looking at prices, really the resistance coming in around about 385. We're trading at 367. And no sign of that really slowing down. Nice volumes picking up as well over the last week in copper. Diving into indices before we have a look at the FX markets. Want to take a look at the one I was interested in and went short of yesterday on the gun-to-head trade I did, which we'll run through in a minute, and that failed. Nice little turnaround after we saw this topping formation over the last week or so. A nice bullish candle to push higher and really mess with my charts, I'd say. We're still in this corrective channel, looking at hugging the top of this top of the channel, and we're up at resistance levels from the end of May, around about the 4,206 level. Just trading above there now, trading at 4,221. Resistance, let's redraw this, see if we can get some Fibonacci retracement levels on here. From the most recent sell-off, we'll take it from there. And we're really looking for where the 61.8% fib is. We're approaching it, fast approaching it now, 4,255. And you can see if we look back, that was not far away from the previous swing low, 4,268. There's one here as well, 4,237. So around about the 4,255 area, we should find some more resistance. But you know, can't ignore the trend higher is definitely good for stocks, good for indices, and yeah, we'll be filtering through to the other indices as well. Looking at Nasdaq, that's hugging the top of the channel as well. Nice little turnaround and levels we haven't seen since the 5th of May. So looking pretty good there. 13,432 trading, pushing higher. Resistance coming in at 13,530. Above that, well, let's redraw this, and we should see the 61.8% fib coming out in at 13,650. On the European side of things, we can see that we're stalling just in front of this 61.8. European indices haven't quite got carried away like the US have. And this morning we've seen a bit of a spike higher, but prices pulling back from there at the moment. 13,822 is the 61.8% fib in the DAX, or the Germany 40. On the FTSE side of things, again, really nice strong channel and strong move higher, and no real sign of that slowing down at this point in time. Quick look at FX. Let's take a look at the dollar index to start with. We can see the sell-off in the dollar index here, and prices moving down below the support level that had formed from this swing low at 105.05, eventually getting down to just below 104.64, and before the little bounce back on the dollar index below the 21-day moving average. Nice little corrective formation, plenty of support around about this band of confluence here, really. Let's turn it into you do the template, don't you, Jamie? Nice little template. Let's get a nice little green color going here. A nice lump of support all the way down here. And you know, if we look back on the dollar index and just see where it has come from the lows that we were looking at in really start of 2021, this amazing rally that the dollar has had, and a nice little pullback, not much of one really. If we take a look at where we consider the real Fibonacci lines, could the real Fibonacci lines please stand up? Still a long way to go really before we get any sign of a normal retracement. Normal retracements are around about 38.2%. Still a way to go there. So still an exponential rally in this dollar. So paring back some of these gains is not unusual at all. We can see this has benefited the euro against the dollar. The rally continued. We're trading around about the resistance pokes, which was support on a number of occasions. You know, 4 or 5 different occasions we've got decent support around this 103.40. This should now turn into a bit of a resistance level, but quite nice momentum coming into this. That's on the weekly chart. Let's take a look at the daily chart and see how nicely prices have moved away from this upward trending support line and the 21-day moving average. So pushing nicely higher. And although we had the spike high yesterday, which we pulled back from, momentum picking up again this morning as the European session opens. Sterling dollar continues to look pretty positive as well. The nice little bounce off the 21-day moving average, this inverse head and shoulders formation that we picked up. I'll get rid of that now, actually, just to it's sort of like got close to the measured move target. And yeah, resistance coming in around about the 123 area, support coming in around about the 120. So a nice big range for cable there. Dollar yen obviously impacted by the weak dollar. That sold off the 21-day moving average, capping those gains, and looking again this morning that we've opened up a little bit of further downside potentially into the day. I think I'll leave it there, Jamie, unless there's anything that's popped up that.
Yeah, it's all popping up, Steve.
Is it?
Typing a lot right now. Yeah, do you wanna? There's a couple of questions. One was to have a quick look at natural gas. I'm not sure if you did pull that up actually, because I've been sorting out my stocks.
I think I looked at copper. So let's take a quick look at natural gas.
That'd be great. Thank you.
So natural gas has also picked up yesterday. This 21-day moving average is a good one to watch, 21 days, because we look at how many real trading days there are in the week. Probably doesn't suit the cryptocurrency, but it's always one that I've found very useful to sort of like to see. When prices are above the 21-day moving average, the trend tends to be positive, moving higher. When it's below, obviously moving lower, and it tends to sort of like pick up and provide a nice little level of support as markets move. So yeah, over the last 3 days, we've seen some nice price action around that 21-day moving average, and the move higher looks set to challenge resistance now coming in at 846. But the major resistance is above that, is anywhere between an area of 940 to 960. This major resistance is picking up on the peaks of the market over about 5 or 6 different occasions. So that's one to watch. Looking at the weekly chart in nat gas, we can dive into this. We can see that if we really go back a long time, natural gas prices definitely have more potential on the upside. We've seen prices up at 14.30 and around 16.50 in historically, going back to 2005 for the 16.50 area and 2008. So times of crisis, natural gas does tend to have a pickup. Overall, this still looks like we've had a nice little pullback from the highs when we got up to 965, pull back into this supportive area of previous challenge at 540, and aggressively moving higher over the last month or so. We did see prices hit a peak at 940, stalling in front of that resistance, which obviously we can see on the daily chart. But the 4-hour chart, we can see the trend higher has broken and is currently facing a bit of a challenge. We've broken through the Ichimoku cloud support. An ABC correction would target a move lower. Let's just get rid of that because it confuses you on the chart. And we've formed a nice little potential double bottom here. So it's definitely something to look out for. We can see, let me get the little arrows. This low here. And this low here. The neckline for this potential double bottom, remember potential, very important word, comes in at 847. So a break above 847 would then confirm this double bottom formation. I mean, it's an intra rally one, but it's still, you know, on a shorter term basis, this would still look pretty good. And that would be a measured move target back towards then their highs to watch. So key level to watch for me on natural gas 847. Anything else?
Nice one. No, I think it's good for now. We had a request for a stock, but I'll take a look at it in a sec.
Okay.
But just a quick one. Thanks for everyone that's participating in the chat. Thanks for everyone that's watching. We love when you guys ask questions and request stuff to see. The interaction really makes it more enjoyable for us. So thank you everyone that's tuning into the stream this morning. I will take a look at some stocks then, if that's all right, Steve.
Yeah, absolutely. Go away.
Cool. We'll start off today with our biggest gainer and loser. And our biggest gainer is this NVTA up 276%. Invite Corporation. Let's have a look, see what we can find about this. Tripled in price on Wednesday, climbing more than 225% after the genetic testing firm reported a smaller than expected Q2 net loss. That's great to see. Good stuff. Well done, anyone that was on the right side of that move. Flip side of that, we've got OPRX, or Optimize RX Corporation, down 30%. Looks like it was an earnings miss. Let's have a quick look at that. OPRX tumbled 27% amid heavy trading after the company reported a lower Q2 adjusted profit. Yeah, so pretty nasty looking price action here for a while. We see the lower highs and lower lows, and then, you know, earnings is always a tricky time to try and trade, so be very careful if any stocks you're looking to trade are trading around earnings, because you get big moves like that. Look at this. This is a heat map for yesterday, and obviously off the back of that CPI data, it's just a sea of green. I mean, this makes me really happy. It just looks really nice, much better than that sea of red that we've seen a fair bit over the last few months. So yeah, a really nice day. All of the big names, Tesla, Amazon, Google, Apple, all up over 2.5%. Microsoft as well. Just a really strong day across the board. But one stock that was actually requested, which performed one of the better stocks of the day, was this Plug Power, which was up 16.66% on the day, and this has had a really nice move since breaking out of. Let's get some drawings going here. We had this resistance level here at about 1935, and it gapped through that, and since then it has really taken off, and it's still got quite strong volume coming into the market. Yeah, Ryan, I know long term it's still, I mean, we are still in a bit of a downtrend if you ask me on that. Slightly longer term, if we look at a weekly chart, you can see we're putting in lower lows and still putting in lower highs. So we need to get a break of that if people are liking this long term. Drawing a trend line resistance there, so we're getting up to this pretty key level here. Actually, this is an important point for plug power where I'd expect to see some selling no matter what happens, because if we also draw this, we've got the previous resistance here, and the trend line resistance coming down, and they kind of converge around this between about 29 and 32. So I'd expect to see some selling, but obviously we've had this really nice move. Like I say, some selling, and then if we get some kind of lightning bolt action, something like, a bit of a sell-off here, before we move higher and we retest this. When you start seeing something like that, that could be even a bit of a, it's a very preemptive because we haven't had it yet, but that kind of price action, you see a bit of an inverse head and shoulders, and that could potentially be a bit of a bottom in on plug power. Certainly if we get a strong weekly close, I wouldn't really want it this week because it would feel overextended, but if we get a weekly close above this red line and this black downward trending resistance line, things start to look much better for that. But yeah, certainly looking pretty good in the short term. We've had a lot of volume coming into the market on these up days, which is a good sign. And the same, unfortunately, can't be said for a lot of these stocks. And I want to pull up Apple quickly. And what I'm looking at here, we've looked at this a couple of times actually, but this black line here kind of shows for me, look at the volume we're seeing falling off on this rally. This rally since the middle of June, so it's been going on almost 2 months now, has had very little in terms of a pullback, but there's also, to me, not much behind this. You can see the volume is trending lower as the price is trending higher, so I'm skeptical of it. Obviously, I mean, price trending up is certainly a good thing for anyone that's bullish on this stock, but to me, certainly be a little bit aware because perhaps not as much institutionally behind this move higher, which is really what you want to see for a longer term success. So certainly good the price moving up, but keep close eye on the volume. Yeah, and we're coming into this previous level of resistance on Apple right at the all-time highs. Certainly expect to see some selling at around this level, but still got a fair way to go to get there. Quick look at AMC. Obviously, we've had a bit of a squeeze the last week or so. Getting this bullish hammer, didn't quite come and retest this support level which we had drawn out, but still quite positive looking day. It's going to be choppy trading on these meme stocks for a while. It's going to be a bit of a lottery, so be very careful. Obviously volume's picking up, but you'd expect that on a bit of a squeeze, so keep an eye on that. Jump into AMD, and we highlighted this a few times, this downward trending resistance which we broke above on the back of earnings last week. We came back and retested this on, what day was that? Tuesday. And off the CPI data, we've moved a bit higher. I think we did put out an idea for this. Well, I know I did because I was the one that did it. But looking to get long at around this level. So that started off quite nicely. We'll see if that can extend a bit higher. I've had a quick request for, I think that's fuel cell, isn't it? FCell. Let's have a quick look at that. What have we got? Oh, nice. Oh, look at that. I have a good idea. Wow, that's embarrassing. Up 14.79%.
Is Ryan your other student? You're sort of like you're bumping up your own trades here, Jamie.
Yeah, it's my alt account. We're getting all the good ideas out. But no, fuel cells had a really, really nice move. A bit of a, you could see this is a bit of a triple bottom, certainly a double bottom put in place here. We had a bit of a downward trending resistance, but I prefer generally looking at horizontal resistance and support. So that would have been the key break above it for me. We gapped above it and then tried to get back lower, but a really, really strong day yesterday, up 15%, as I say. Familiar with the history of it, looks like in the past reached some pretty surprising levels. Any chance it may in the future? Look, I'm not super familiar on this stock, but certainly from a technical perspective, it's been struggling for a while. You can see, obviously, we had this really huge move up here, and actually, this at this point is, I mean, that's an excellent break there if anyone could have got in on that. A real clear resistance level, a real clear break of that resistance on huge volume. So that was a really, really nice play there if anyone got a chance. But in terms of getting back to the highs that we've seen, this is a good start in terms of the price action, but for me, there's a lot more to do. I'd expect perhaps a bit of a move higher at this stage before retesting this red. What was a resistance level? We can change that to blue now. Get that lightning bolt action. The same thing we were talking about for what was it? Talk about plug power earlier. But a lot of work to do. I mean, there's going to be a lot of overheads resistance on the way up. We're going to have trendline resistances. We're going to have a lot of psychological levels to try and get through. So in terms of getting up to these highs, let me draw on a couple of these levels I'm talking about. So this is significant here. We've got lots of significant levels to try and get past before we get up here. But you know, when you get a bit of a squeeze like we did back here, these things can also happen very quickly. But we're not in the business for looking for those squeezes. We're looking at the technicals, and as an initial start, this is quite a nice small base we're getting here now. Volume picking up there. I know it's red volume, but this was actually, if I change this, I like to change it on color based on previous close, because this actually closed up on the previous day as it gapped higher. So yeah, not a bad start for fuel cell, but more work to do certainly there. Might see a bit of a pullback in the market tomorrow. What do you think on that one, Steve? I think there, you know, could be a pullback. I mean, we did have a quick look at the SPX, but what's your take on that one, Steve?
Yeah, personally, yeah, I think that you get the sort of like when you get these CPI figures out that people are looking at, you get a lot of excitement and follow through when it's not quite as bad, and people thinking, oh, it's all over, it's all roses now, but it's not like that. The market is, that'll sort of die down over the next 24 hours, and we should see some sort of realism hit the market. We're still in a quite a precarious global position that doesn't look great for the longer term. Still got a lot of things impacting on inflation, interest rates moving higher. Still, it's not just going to go away overnight. So I think overall, these nice little relief rallies are something which are quite exciting and people can look forward to. But personally, I think a lot of the stocks could have a limited relief rally, and then back to the real world. I think, Jamie, that's my personal feeling. It just that's how the markets work. You sort of like, you do get that people getting carried away with the initial numbers, and then price sort of like kicks in, and realism kicks in.
Yeah, I tend to agree, and bear market rally still is the kind of the line I'd take as well, Ryan. I mean, we did have a look at the S&P, but the volume still isn't quite there for me to suggest that there's actually potentially the bottom's in. I mean, maybe the bottom is in, but I certainly think there's going to be further downside before we do get that move back to the highs. And I think a lot of these stocks are confirming that. We'll just jump into a couple more quickly because I'm taking a bit of time on some of those. CrowdStrike is at this pretty key 61.8 fib, but certainly still moving lower. Bearish bias on that. Disney, what am I looking at? Disney. This had earnings out by looks of it yesterday. Again, look, the volume is coming off on Disney, but we did have earnings which spiked up the volume. Looks like it was a slight beat, but we're back into this resistance up here. What we've got here, Lilly, the volume, again, this is bad volume. Big red days here. Not looking so hot either. Meta platform, we finally broke out of this stupid channel. About time. Gap through it. That makes me very happy. Thanks, Ryan. Appreciate you coming into the stream today. We'll quickly jump in on Neil. I don't know what this arrow is. It's obviously eaten its greens. It's got way too big for its boots. We're getting rid of it. But we had a bit of a potential for a double bottom here. But what I'm starting to see now is the potential for an inverse head and shoulders bottom on Neo. We've got the left shoulder here, head here, and now we do get a move back towards this resistance. Potentially that will be quite a nice looking inverse head and shoulders. Volume is really starting to come off here, but this from a bullish side doesn't overly concern me, because you see the volume started coming off when we hit that resistance level. So to me, this is just a bit of a correction on the upside with this volume we've got here. So less worried about that. If the volume was down on the rally up, that would be more of a concern, but this to me is actually kind of a good thing. Maybe setting up before we do break higher. Novavax, we looked at that was down pretty heavily the previous day off earnings. Nvidia, similar story to Neo. We're getting a bit of a inverse head and shoulders potentially if we do get a move back towards that resistance line. I think we will pretty much call it there on the stocks. But yeah, pretty nice day overall. Look at that. There's only, I'm just Beyond Meat's there, but I'm getting rid of it so I can say, look at all that nice green.
Yeah,
I mean, a really strong day. Beyond Meat
can
leave. Yeah, it's ruining it for me. But yeah, a really strong day yesterday. Let's see if we do get a bit of follow through. Just one more question. Do you think volume on Apple could be an early sign of what might be happening in the rest of the market? Yeah, no, I think that could be it because the rally we've seen on the S&P, and let's see if I can just quickly pull that up. Um, I need one with volume. What have we got? Here we are. Do we have this one? Doesn't have volume, but I know that this rally we've seen upwards, really from back end of June, this has been significantly lower volume than we've seen on the downside. So um, until we do get a bit more volume come into the market, I think yeah, this uh, bit of a bear market rally and certainly scope to move lower. I mean, realistically, I think it was still likely that we could get back down to these lows we've seen here, because we haven't really seen that big. I think we've talked about this before, but the big sell-off that kind of clears out all those weak hands on the long side. I don't think we've seen that yet, Steve. So
No,
potentially that could be something that happens sometime.
I think if you sort of think back to the start of the pandemic back in 2020, we saw like a classic V-shaped recovery where we had this huge aggressive sell-off over a number of weeks, and then this like huge gigantic rally, very V-shaped.
Mm,
And sort of we haven't really seen anything quite like that, or we haven't seen that those sort of levels either. So yeah, there is potential for further downside, but it may be a slower grind and it might take a lot longer.
yeah,
There's sort of like, when we look at volumes, obviously it's good to look at, what sort of volumes, and it's good to understand where the volume's coming from. Like you've mentioned, Jamie, the institutional investors, when volumes are picking up on the sort of like the really big markets, the really big stock markets, that it's really a classic sign of institutional investors getting involved. Um, and but you're also seeing sometimes you get the retail investors, as a sort of like when they all become one herd, they can create some decent volume out of that as well. So yeah, volume can be, sometimes it can be really really sort of give you a real good general idea of what the sort of emphasis is in the rally, if the rally is just more of a reaction rather than actual real volume coming into it, real sort of purpose to it. But sometimes it can sort of like distract you as well. So it's yeah, you've got to look at other things as well. That's the key message to it. We're seeing the trend, we're seeing the volume. There's other things as well, indicators we can look at to give us a little bit more knowledge on what we're actually seeing. So yeah, all good.
yeah. Very nice. Yeah, I think that's all good for me there on stock, Steve. Someone's saying about having a look at gold. You did take a quick look at gold earlier, so that might be one to go and
Yeah,
watch back a bit later, or unless you want to have a
yeah.
quick look now.
I can have a quick look, and then we can dive into the gun to head, just as we said
Sure.
on gold. Let me get my screen up. So yeah, gold, nice little break through the 1800 level yesterday. We can look at it on the daily chart. Break through the 1800 level. We had this bearish channel drawn in already, just an indication of just connecting these 2 points really, and then this point below. That gives us a bearish channel. We've got 2 points below. We've now formed a third point above, so that for me is a trend line. You need 3 points to have a trend line. You need the first point, the second point, that's a potential trend line. You get a third point, that's the trend line. That's how we use it in technical analysis. However, the actual candle itself is almost like a shooting star candle, which has shown that prices have moved to a new high, and they don't like it. It's rejected. Computer says no, and the reversal on the day. So that's a shooting star, very typical of a shooting star, not a perfect one, but uh, nothing's perfect in analysis. And then if we get some follow through today, that will be a shooting star formation, which is a green candle, the shooting star, then a red candle. That's a evening star formation. You can get the reverse on the bottom, which is a morning star reverse. Morning star formation. So yeah, that's pretty negative overall reaction by gold, hitting that trend line, rejecting, moving lower, and now we've got a level of support at 1784. If we manage to close below there on the day, that will, for me, confirm that formation and potentially further downside in gold. Above there, above the 1807.08 level that we got to yesterday, we've got some nice decent resistance coming in the shape of 1830, which is a 38.2% fib retracement. And you can see this area of battle that took place between the bulls and the bears, and that would be a resistance level all the way up to 1875. That's it for gold. So moving on to the part of the show where we have a little bit of a challenge. Myself and Jamie will take a look at a market and we'll pick a trade idea live on air and we'll publish it onto our channel, onto the TradingView channel. So it's there forever and ever. Each idea has to have a stop and a target. We insist that we have to pick a 2-to-1 risk reward, and we place it at market. Trade ideas expire at 9 p.m. today, UK time, or whether if they hit target or stop before that, then they're marked and accounted for on that basis. We've got a performance sheet which we can share with you next week when Joe's back. He's the Excel guru in our midst. So I've had a little look through, Jamie. Have you got anything that you like? Because I've just picked a market and I've actually forgotten which one it was now. So
Oh, well, I could buy you a bit of time because I've got one ready to go.
go ahead.
So I'm going to be taking a look at the US dollar against the Japanese yen today, and obviously for a long old time this has been a really bullish pair. But we have seen in recent times a bit of a sell-off, and off the back of the TPI yesterday, we saw a very aggressive sell-off, which has looked to form a bit of a flag pattern here. And one of the things I like to look at is after aggressive sell-off, usually for me the first rally struggles to hold. So I'm actually looking for this to extend today and actually move even lower. It looks like we've broken through. That's a very bearish looking candle, that 7 o'clock one, this flag pattern we've seen. So yeah, I'm just going to hope this keeps moving lower, and I'm going to target this previous low from the 2nd of August. So looking to short the US dollar against the Japanese yen at current price, which is 132.53. There we go. Profit level, we're going to look to aim at 130.38 with a stop. Where are we going to keep that stop? We could keep it a little bit higher actually, just above the high. It kind of lessens the risk reward a little bit, but still 2.72 isn't too bad. So we're going to keep the stop at 133.35. Gives us a 2.73 risk reward. Yeah, I quite like the look at this one actually. I'm hoping for a little bit of a move lower on this. To give us some nice profit on this today.
Excellent, nice one.
Thank
Good
you.
luck with that. I've just had a little look through, and Euro New Zealand dollars popped up. Now, I don't look at Euro New Zealand dollar for any reason really, apart from looking for a gun-to-head trade idea. On the week, performance has been pretty poor so far, and I'm looking at the daily chart here, 21-day moving average. We've reacted lower from there, and it's quite a nice reaction. It's taken out a few levels of support that we saw, the 161.33 level, and on the 4-hour chart we have rejected the advance through the 4-hour Ichimoku cloud and continuing lower. On the hourly chart, the interesting move really for me was this really aggressive move that we've seen since yesterday. We started about 1 o'clock UK time. Nice little bearish flag forming. Now, normally you'd wait for a break of this flag. Just, if you can see over the last couple of hours, we've had a little bit of a pullback from that low, and really the ideal scenario would be wait for a break and then get on it. And when we talk about a flag and a flag pole and everything, what you tend to find is this move can often result, you get a measured move target of somewhere like that 158.73. So on the basis of that, I'm going to sell Euro New Zealand dollar. I'm going to preempt a break, which isn't ideal, but it gives me an opportunity. Nevertheless, I'm going to sell at 160.77. The stop on this trade idea is, how about that? Just a 50 tick stop and a target of 200 points. So I'm looking to sell Euro New Zealand dollar 160.77, targeting a move to 158.77 with a stop of 161.27. I'll publish that now.
Very nice, Steve. Looking good.
Well,
Just
we'll
a quick
see.
A quick thank you to Solomon Seth. I can't pronounce that. I'll call you Solomon. Solomon with 100 coins on TradingView. So thank you for that. Really do
Wow.
appreciate it.
Yeah.
Appreciate everyone coming into the stream. As I say, it makes it a lot more interesting for myself, Steve, and Joe when we can talk to people and discuss what you guys want to see. So thank you very much all for coming in. Thank you, Solomon, for the coins.
Yeah, exactly. That will go towards Christmas party, won't it, Joe? Jamie.
It
Yeah, or just
will. It
we'll
will.
keep it. We won't tell Joe about that. That was my first train of thought. That's why I mentioned Joe's name.
That's a good
But
point. You
maybe
don't have to.
he won't be watching, will he? So let's think about the day ahead. We've still got figures coming out: 1:30 US producer prices, jobless claims at 1:30 also, and tomorrow morning, Friday morning, UK GDP QT second quarter first reading. So some data out quite early, 7 o'clock on a Friday morning. Who'd have thought it? And University of Michigan Consumer Confidence tomorrow also. So thanks for joining us today. I hope you've enjoyed it. Hope it's been informative. We're going to post them gun to head trade ideas very shortly, and you'll be able to see them on the channel, on the TradingView channel. So until then, until tomorrow, we'll see you then.
Thanks everyone for watching.
Cheers.